Hello everyone. Welcome to this special video. This video is going to be special. Why? Because we as a group have completed 500 subscriber on YouTube. So, yep, it is almost 5:30 now. A special thank you to all of you, every one of you who had been contributing for this part. Second thing is, apart from that, we have also completed 500 subscribers on Unit of Technical Analysis Telegram channel also, right? So thanks for that, first of all, and get back to our original things, which are finding out what's happening into the market, especially, right? So this would be more of what would be happening for the next week, and probably before that, we'll just try to take a review of what had been happening last week and what are the things that we had updated, right? So let's go to that Excel sheet. For last week, we had specifically seen on the monthly time frame, right? So Nifty trend line, which was there on the monthly part, we had seen that MACD had completed a crossover on the downtrend. So what do that means exactly? We'll see that. Mm, First, second, this is Reliance, and this is Nifty. Yep. So this is MACD. If we see MACD on the monthly part, uh, is this monthly? No, if this is not monthly, probably we just, yep, this is monthly, sorry. So if we see this is monthly, yes, there has been a crossover, right? So crossover means that probably the chances of Nifty going down is much more. I'll tell you why. Let's see the latest crossovers that we had. So this is a monthly chart probably. So this was the first crossover. This was there in 2008. So after the crossover, we saw that there was a recession. So huge crossover. Second thing is this a crossover which happened in March 2011. So after that also we had a huge recession. This crossover was there in 2015, right? So after that also we had a huge recession which was there. And the latest one was there in 2019. So this is almost December 2019, and January onwards we saw that January, February, March 2020 there was a huge fall, right? So looking at the indications and from the history point of view, one, two, three crossovers, rather four, and we had four bear cycles also ultimately after that. So we see a crossover, so the probability of market going down from here are much more, right? So this is one of the probabilities which is there. We'll see other probabilities which would give us some kind of similar indications which are there, right? So this was like we knew there were four bull and bear cycles that we have studied. For this, you can go to chapter 1 of Unit of Technical Analysis. You'll be finding these details in the playlist. I'll request you if you can just go across through that, right? So we had seen four bull and bear cycles, right? So what done from my side is I tried to get into the details of that part so that we'll be able to explain things further. So what is those further things? Let's try to analyze, right? So what I've done is, first of all, this is our cycle of 2004, 2008, right? Similarly, I have considered cycle for 2012, right? So this is a bear cycle. We have only considered that part which is on the downside. Here also we are going to consider the same part which is on the downside, and we are considering the same thing which was there previously almost 6 months back, the first chapter of bull and bear cycle. So we are going to consider a Fibonacci starting from zero, which is the low of the bear cycle, to the high of the bull cycle. So this complete cycle is 0 to 1, right? So this is 0 and this is 1, and after that the downfall which was been there, this is prima facie our point of focus, right? So let's try to analyze this. We have considered all the four cycles. So I'll go to the fourth cycle over here also. So this probably is the fourth cycle, right? Uh, so first cycle is 2008, then the second cycle is 2011, 1011 rather. Third cycle is of 2015-16, and the fourth cycle which is of 2020, right? So we'll just try to analyze something more of in details and try to see what are the common points and something which we'll be able to implement for this part, right? So the high was there. This is monthly chart. So it just count down number of months which are there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 months there was a bear cycle. So we'll just try to write down one by one all the things. So bear cycle, this bear cycle is of 2008. So I'll just maybe highlight that. So this is 2008 and then 10 months, right? And some other details which were there is like this did fall down, this went to a point of 0.236, so we highlight that also, 0.236, right? This will come to a later part what exactly this is. Let's go to the next cycle. So next cycle was 2010 2000 2010 2011, right? So 1 2 3 4 5 6 7 8 9 10 11 12 13 14, right? So in 2010 2011 there was almost 14 months of bear cycle. I mean the bear cycle took 14 months. So I'll again try to highlight 14 months and it came down to a location of 0.5, right? So if you consider the entire range, this has almost come down to 0.5 levels, right? So this was the second part. Third is cycle of 2015 to 2016, right? Again the same thing we'll be doing. We'll just measuring the number of candles: 1 2 3 4 5 6 7 8 9 10 11 12. So 12 cycles are there and it came down exactly to 0.5. So this is 0.5 which is been shown over here. So we write down is first of all 2050. So this is 2050, right? 12 months, right? And it came down to 0.5, right? Let's go to the next cycle. Next cycle is to 2020, right? 2020 it was like quite simple, 1 2 3 months, and the game was all been done in 3 months. This was because of the COVID part, and it came down to a location which is 0.236 of the range. So again the three parts: 2020, number of months 3, and 0.236, right? So what we see in common is approximately the cycle which is there, that is at least for 10 to 12, 10 to 14 months, right? For the last 4 full bear cycle, we are just considering that. Of course there have been previous cycles which took somewhere around not more than 3-4 months also. I'll just tell you about that example also. So if you consider probably something, let's say for example this cycle was there. So this is maybe starting from 2001 to 2004, right? So here there was a low and then it went up and again it came back to somewhere around 0.5 location, right? So here if we consider the months which are there, this is 1 2 3 4 5 months, only 5 months, right? But let's say we are not considering that, we are only considering the last full bull bear cycles, right? So this is the data that we have in our side, and the first one came to 0.236, the second one come to 0.5, the third one 0.5, and the fourth one to 0.236. This we have overall as a summary from the previous part. Let's try to implement it over here, right? Let's try to see what has been happening for the current cycle, which is 2021-22, right? 21-22 is why, because the high was there in 2021, that is October. And let's again try to count out the number of months, right? It is 1 2 3 4 5 6 7 8, and we are currently in the ninth month, right? Ninth month is in terms of the months which are there for Nifty into a bear cycle. Please don't consider anything else as specifically. We'll consider 8 months and 2021. Again, I'll just highlight that so that this has all been considered, right? So ideally, if we see 12 months, 10 months, 14 months, so this again gives us a kind of confirmation that okay, boss, we are there into a bear cycle, right? Because whatever cycles were there previously, where maybe downtrend was there for a month's time or 2 months time or 3 months time, not more than that, during a bull trend. But there it is almost like similar to a bear cycle. So we can consider that this is a bear cycle which is there currently, at least in terms of time frame. Not in terms of the price which is there, but at least in terms of time frame, we have to agree to that. We have got two indications. One is the monthly MACD crossover, and second is as per the time frame which is there. We can say that okay, and 8 months is a long time period for a bear cycle. I mean, like we can say that yes, this is there in the bear cycle. What we need to find out as a probability is from the last bear cycles is will this go to 0.5 or will it go to the 0.236 part, right? Now we have two conditions. For 0.236, it was either 3 months or 10 months, right? And for the 0.5 part, we had 12 months or 14 months, right? So if it is going to get a longer time frame, let's say for 12 months or 14 months or maybe 16 months, we can approximately say that it will be going to 0.5. Now see, understand, we are just trying to remove which is not an option and try to go towards something which can be a higher probability, right? So trading is nothing but try to find out higher probability trades which are there so that we can understand what should be our trading targets. It can be 0.5 or it can be 0.236 of the range which is there, right? So those are different because this time it's going to be a huge fall. Why? Because first of all, we see that the range is there of 11,000 points. 11,000 points we are able to identify from our previous video, which is there for basics about trend line, where we found out that the range was there of 11,000 points. I'll just open that Excel sheet, recent one. So that, yes. So we saw that, okay, 18,604 was the high, 17,57511 was the low. So if you see the difference which is there, that is almost 11,100 points, right? And if we see half of that, that would be approximately around 5,500 points. So from 18,604, 5,000 points down is somewhere around 13,000, right? We'll go to the exact figure also if you want. Let me just down. Yes. So 13,000 is our level. And if you go to 0.236 level, that is going to be 10,000. So we need to find out this should be our target or probably this should be our target. It can be anyone at this stage. It would be a wild guess because we don't know what exactly would be happening until what time it would be going down. There are people who are saying that, okay, this would be a long crash, but let's try to understand on the basics of the previous cycles rather than just having any kind of assumptions, right? Because we are traders, we have to find out probabilities. We don't have to go by any kind of news, whatever it is, right? So coming back to our chart, right? So we know that, okay, fine, it has been almost 8 months, right? Now let's try to extract some extra data that we will be able to find out from this uh, 4 bull bear cycles. Now we are trying to avoid this previous cycle. Why? Because this is only for 3 months, so it won't be giving us any kind of exact data. 3 months time period is also always been done with. So we have only 1, 2, 3, 1, 2, and 3 cycles which we have to compare with, or probably try to understand what are the things and how that would be happening, right? So here what has been happening is, let's say for example, if you consider this cycle, right? So it was a low which was been made. After that, it retraced up. Again, it came down. So when it came down, what happened is we got a kind of double bottom, right? And then after that, it again tried to move up. At what levels it did go? It went to a level of the 0.236 of the entire range. So this is something we got as a point. Let's try to see if we have been getting retracement till that point in the other cycles also, right? So this retracement was somewhere around 1, 2, 3, 4, 5. Retracement is okay, going down and taking a reversal. So this is a retracement for us. Why? Because this would be going further into the downward direction. So the level is 0.236 and it took around 1, 2, 3, 4 and 5 months. 5 months is like this is the last point where it probably tried to touch, and from there it went down, right? So exactly talking about is 1, 2, 3, 4 months only. But we are considering 5 months because this was the fifth month. We don't know, like it went down in a day or two or something like that, right? But let's try to analyze things. It won't be making much difference as such, but just as an assumption. So yes. So for the first cycle 2008, we considered that the time for reversal up to 0.786 was 5 months. Right. So again, we highlight that as 5 months. Let's go to the next cycle, which is of 2010-11. Right. So again, same thing happened. It made a small range, went up. It was giving a retracement. Again, it came down. Maybe probably completed 1.618, and again from there it went up. Right. From there again, it tried to move down. Now, how is the cycle? Let's try to compare that so that we'll be able to have some kind of analysis which is maybe similar to what has been happening in Nifty now, right? So we had a high, we came to a low, again maybe probably a retracement, and again moving down, right? So this is low was 5177 and the low over here was 5195. So this was a major low, right? And there from there it went up once, it again tried to come down, probably take a support at the previous low level, and then from there it again tried to move up. So is this something similar to what has been happening with our current Nifty levels? I'll just remove this yellow line so that things should be clearer to us, right? So again, like, okay, it went up, again it came down, took a support, and the low over here was 16439, sorry, 15671, and the lower here has been 15737. Not a huge difference as such, 671 and 737, so somewhere around 60 points. But yes, again, same kind of cycle that we have seen previously, that okay, it took a support at low, probably from there again it tried to go up, and what we see over here is this candle specifically has been a bearish engulfing candle. I'll just try to mark that. See, we are getting some kind of clues which are there, and we are on the basis of that try to identify things. At least the body has been engulfed, not the wick which is there, but at least the body has been properly engulfed, right? The next candle has probably engulfed the body also, the wick also, right? So here probably it would be like it may go up and then come down, or probably a next candle would be formed where it can be having an engulfing. You don't know. We are just taking a wild guess at this stage, nothing more than that. Or maybe if we can get some kind of signals into the weekly, so let's go to the weekly candles also. See, we are trying to see probabilities and what may happen, nothing more than that, right? So I don't know, probably it's taking some time. Yep. So we see these candles, it was a low, then probably this closing was good above the previous closing. This closing is also good above the previous closing, but not really good kind of candles because it has been getting rejections from the top, right? Let's try to find out some other clues also, which if possible we are able to get, right? So what the clue would be is, again we'll go to Fibonacci. we'll go to the high, low, and from there probably a high. Perfect. Let's try to get the exact coordinates. We got this low. This low was 5177.7. 77.7. Right. And my high was 6338.5. So it is 6338.5. We are just taking the accurate points so that things become easier for us to understand. And yes, that's our results. So what we get as a result is probably it went up above 0.5 levels. From there again it tried to go up, and from there probably it just came down. So this is what has been happening in Nifty, especially over here, right? Oh, if we see from our part at this stage, not for the entire range but only for that part, I guess I have something which has been marked over here. Because rather than drawing on those parts, it is easier that we have something which has already been marked, right? So we are trying to find out high probability what and what levels it would be coming up to, so that we are mentally prepared and try to understand things. Yes. So if I try to zoom up over here, right? So this was my previous low marked at this level. And from here, this is my 0.5 level. So again, if you even see in the Telegram channel, I've specifically mentioned that maybe it can come down to 0.5 level. The logic was very simple, that if I see from the history of previous bear trends, I come to know that if there was a low which was been formed, or maybe probably a second low, or it may be like, okay, this has been done, after that probably this low was been formed and coming. Okay, just hold on, just give me 1 minute and let me extend it further to 2 points, 1, 2, and one more point. Probably I'll go for one more, right? Right, so we got our first low over here where it went up. We got our second low, right? So after this second low, market probably went up to what levels? This is what we want to see. So here it went up to, the high was 5740, and my Fibonacci level is 5758. 5758 is my Fibonacci 0.5 level, and the market went high over 5740. So it was very accurate, like probably some points which were there, which is maybe less than 1%, even, yes, less than 1%, rather, yes, that is there. So that much of accuracy is good enough for us to take any trades. So we can consider that, okay, fine, here also, if required, Nifty can go up to 17,137 level, or somewhere around 17,130 at least. So there probably we will be getting some kind of signals in for the trading part. Now again, this is again a wild guess. This may not be 100% sure that similar cycles may be repeated, but just we are trying to take an understanding from the previous cycle what may happen. So it's like we got a double top over here. The market did move up. This month it was just trying to move up, right? and after that probably the next month it did try to touch up and then go down, right? So this candle probably is, let me go to the monthly chart, right? So this bottom was there, probably first bottom, second bottom is been done up with, right? The part which may had to go up, or probably the wick of this part is the high that we have, and from here the market may again start coming down. It may happen, right? So it may be like, okay, the high is already been done with. Why? Because we already saw over here in this part, right? This chart, that it has already completed a 1.618 retracement. Okay, let me just go to our Telegram channel so that you'll be able to confirm for those things and also know what are the levels which are there, right? So this is Nifty, right? So we came down to 1.272 level, which was 16,683. Probably there was a double top over here, right? From there, the market started coming down. So until unless we have some kind of other confirmations, we are not pretty sure. But so let's assume that things have been happening accordingly, right? So yes, if we go to the charts, this looks similar, probably somewhere cyclic, a double top, and after that maybe start moving down further, right? And yes, we saw that, okay, it went up to now one more important thing is, as we saw that the last point over here coming up to 0.786 was maybe 5 months. Here 2011-12, it took somewhere around 14 months. So we'll try to find out the reversal point over here also, how much time it has been taking. So it was like first month, second month, third month. No, this is our high, right? So it was like first month, second month, third month, fourth month, fifth, sixth, seventh, eighth, ninth. So 9 month it was up, and the 10th month onwards it started moving down, and it went up to 0.5 level. So again, in terms of that, it is the 10th month where the candle has started moving down regularly from there. Right, so it is 10th month, and we write down the same thing over here. Right, let's go to the third cycle and try to identify if it is the same or something like that. Right, so what we get over here is, we got a high, then we got a low, then we got a lower high, then a lower low, a lower high, and a lower high, lower low. So the pattern was very clear. There was no double bottom as such. Especially we got a high, we got a low, market tried to go up, probably this was a 50% retracement. From there it completed 1.618 or maybe 1.272. From there again it tried to move up, right? And from there it did go down. So it was pretty simple, but again we saw that this was the last candle where we got a rejection at 0.76 level, because the closing was just below that. So it is 1, 2, 3, 4, 5, 6, 7, and 8th candle which was there, right? So probably we are taken over here and we confirm that, okay, this is 8-month candle, right? So even if we look for this part and consider this 3 months, that is a recession of 10 months or 14 months or 12 months, we again are not pretty sure how much is the time period which is there and how much time period the recession can be going down. So because these are just approximate months that we are getting. So talking in terms of our part, let's see and let's try to compare what probable reversal time period that we are getting, because it is the 8th month till now, and till 8th month we haven't crossed this 0.76 level, right? So high was 1, 2, 3, 4, 5, 6, 7, 8. And if it is the 9th month, if this 9th month it comes down, or probably next month which is there, which it takes, try to get a resistance over here, and that ninth month goes down, then probably we would be able to say on maximum part that it may be going up to zero point 0.5 levels only. Why? Because the probabilities are on higher side. See, if you see over here, the retracement, or maybe the months which were there were only 3 months over here for a time period, or maybe going up to a level of 0.236. The next one which is there, it took almost around 10 months, and the retracement was there of 5 months. So that our 5 months retracement is already been done with, right? But we haven't, we are still above this 0.76 level here. This is the 0.76 level which has been marked. So we are still above that. So probably the probability of going up to 0.236 is also less. Why? Because this is not matching, this is not matching. So the probabilities are much more towards 8 months, 10 months, right? And if this is the ratio that we are getting, so our probabilities would be higher that, okay, this cycles would be repeated, which is nearer to 0.5. So if you are talking about 0.5, 0.5 would be 13,000 levels, not more than that, or somewhere around 100 to 100 points upside, 100 to 100 points downside. So ideally, again, we come to a conclusion that this ratio, or maybe coming down to this levels, would be higher, right? Again, this is a wild guess. We are not 100% sure same thing would be happening. It may happen that the market take up support from here and again come back, also move up. But again, if we look down to the number of months, maybe the bearish divergence, not the bearish divergence, but the crossover which is there in MACD and rest of the things, again, it gives us a higher probability that we are there into a bear trend, right? And we are into a bear trend, that we are trying to have a probability. And if it is a bear trend, till what levels we would be able to go? This is what we are trying to understand. So from this, we are getting a high probability that at this stage it will be going to a level of 0.5 only, and the 0.5 levels are 13,000 levels, right? So this is what I wanted to firstly explain. And the best time to trade on those long cycles would be at a level of somewhere around 16,230, because we are still just above those levels, right? If we see, it is 16,584. Again, to be on safer side, if something kind of a price action happens, especially into the daily part, we will be able to take the chances. Otherwise, not. I mean, like from my side, I still won't be taking any chances until unless I get some kind of confirmation, right? Because I still think that, okay, it should be coming to the 0.5 levels which are there, going higher side, and then probably from there it should be moving down. But if I look at Reliance also, Reliance is again on a higher side. So that chances of Nifty, or maybe because Reliance has almost come down to 0.76 level, as we told now previously that, okay, it took a support of 0.5 first of all. From there, the next target was 0.76. So this has also been done. Let's look at the price action which will be happening. Why? Because in this daily candle, we have already got a rejection at the top side. But the good part is the closing is about 0.76 level. So let's see how it happens and what kind of price action we'll be able to see further. On the basis of that, we'll be able to decide further things, right? So guys, if you have any kind of doubts, please do ask me. And once again, thank you everyone for completing 500 subscribers on YouTube, as well as on our Telegram channel, which is Unit of Technical Analysis. Okay, thank you everyone once again. If you have any doubts, please do get back to me and I'll revert back to you at the earliest. Thank you so much.